Imagine this, it's the end of the month and rent is nearing to be due and your bank account is nearly empty. You're thinking about a cash advance to fix this problem, but you heard of all of the horror stories. High fees, crippling interest rates, and so on. Is a cash advance your only option, or is it a financial trap waiting to happen? Let's dive into the untold truth about cash advances that you need to hear. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit. Start out by subscribing so you don't miss out on any future videos. Today, we're going to be tackling a topic that's often covered in myths and misconceptions. Cash advances. You've likely heard that they're bad news, but is that the whole story? Are they ever a wise financial move, or should they always be avoided? Stick around as we uncover the realities of cash advances and explore whether they deserve their notorious reputation. So let's start off with the basics. What exactly is a cash advance? In simplest terms, a cash advance is a short-term loan that you can take out through your credit card. It's like using a credit card to buy cash rather than goods or services. Sounds convenient, right? But it's not that straightforward. Firstly, how do these advances work? Imagine you're at the ATM or a bank and you use your credit card to withdraw cash. That's a cash advance. You can also obtain these through convenience checks provided by your credit card issuer. The moment that you receive that cash, the clocks start ticking. Unlike regular credit card purchases, there's often no grace period for cash advances, meaning that interest starts accruing immediately. Now, let's talk about the numbers, and by numbers, I mean fees and interest rates. Cash advances typically come with a transaction fee, which can be a flat rate or a percentage of the amount withdrawn, usually around 3 to 5%. But that's not all. The real kicker is the interest rate, which tends to be higher than that on most credit card purchases. We're talking about the average annual percentage rate, which is known as the APR, and it can hover around the mid to high 20s or even more. Here's an example on the screen. If you were to take a look at my Navy Federal credit card, so the interest rate here that I have on the credit card is 15.24%. But if I were to get a cash advance, the interest rate would bump up to 17.24%. That is a 2-point difference. But there's more to consider. The credit limit for cash advances isn't the same as your credit card purchasing limit. It's usually much lower. So the amount of cash that you can get access to is limited. This makes it crucial to understand your card's terms and conditions thoroughly. So hopping back to our Navy Federal credit card example, the credit card limit on this card is $41,000, while my cash advance limit is only $12,300. So why do people use cash advances despite these costs? Typically, they're used in scenarios where cash is only accepted as a form of payment, or in an urgent situation where immediate cash is needed, or other options are either too slow or unavailable. It could be an unexpected medical bill, a contractor repair bill, or even a last-minute travel need. Understanding these angles for cash advances is important. Yes, they provide quick access to cash, but at a cost that can sometimes cause more financial strain rather than reducing it. It's a balance between convenience and cost that we need to consider before deciding to take a cash advance. Now, when it comes to managing unexpected expenses, many of us think about your typical cash advances. They're quick, but often come with high fees and interest rates, making them a less than ideal solution for financial emergencies. This brings us to a game changer in today's video sponsor, Empower. Empower is a money management app that works hard at making sure financial help is accessible to everyone, wherever you are financially. Sometimes people need access to instant cash. Like with Empower Cash Advance, you can get anywhere between $10 to $250 with none of the negative impact. But if you're looking for access to cash while growing financially, like finding a way to build your credit history, then you should check out their newest product, the Empower Thrive line of credit. Empower Thrive offers a more sustainable and growth-oriented solution, more of a step up from your instant access to cash. Empower Thrive stands out with its initial $250 line of credit, which can grow up to $1,000 with regular limit increases with your on-time payments. This just isn't a one-time fix though. It's a tool for long-term financial and credit health. You get the flexibility of their payment plans to repay in a way that suits your situation, promoting on-time payments and giving you a chance at building positive credit history. One of these plans give you the option of scheduling your payments to be paid in full automatically on your next paycheck to receive 0% APR. No deposit, no hard credit pulls, and open to all credit scores. Empower Thrive is designed for accessibility and who you are today financially. Whether you're facing an immediate financial need or working towards improving your credit history, Empower has you covered. So if you're looking for a smarter way to manage those sudden expenses and simultaneously work on building good credit history, give Empower Thrive a try. Download Empower today and apply for Empower Thrive to start building your credit history you deserve. Moving on, let's tackle some of the common myths surrounding surrounding cash advances and contrast them with the facts. The first myth is that cash advances are only used by the financially irresponsible. This is a common misconception. The truth is a wide range of people use cash advances often as a last resort in unforeseen circumstances. It's not always about the financial irresponsibility. Sometimes it's about dealing with the unpredictable nature of life. The second myth is that cash advances are your only option in an emergency. So it is important to remember that cash advances are just one of many options available during financial emergencies. Most things can still be charged on a credit card. Other options include personal loans, borrowing from friends or family, negotiating payment plans, or even low-interest credit card purchases. While cash advances offer quick cash, weighing other options is always a good idea to avoid high costs. The third myth is that cash advances don't affect your credit score. So contrary to this belief, some cash advances can impact your credit score, though indirectly. High utilization of your cash advance limit can affect your utilization ratio, which is a key factor in credit scoring. Also, the inability to repay can lead to late payments, further impacting your credit score negatively. Now, the fourth myth is that there's always a flat fee for cash advances. The fee structure for cash advances can vary. While some credit cards charge a flat fee, others charge a percentage of the advance amount. This percentage can change based on the cash advance amount and your card terms, so it is important to read the fine print. The fifth myth is that interest rates for cash advances are about the same as regular purchases. Now, this is far from the truth because interest rates for typical cash advances are typically higher than for those for regular purchases. Unlike purchases where you might have a grace period to avoid interest, cash advances occur interest right away. By understanding these myths and facts, you're better equipped to make informed decisions about using cash advances. So here's the good, the bad, and the ugly. In any financial decision, it's essential to weigh the pros and cons. Cash advances are no exception. Let's break down the good, the bad, and the downright ugly aspects of cash advances. So first, the upside. Cash advances offer immediate liquidity. In situations where cash is the only option, like a vendor not accepting credit cards, a cash advance can be a lifesaver. They are also a quick solution for emergencies, like unexpected healthcare costs or bills, especially for those without access to other lines of credit. So when used with a plan and repaid right away, they can be a manageable solution without turning into a long-term financial burden. Let me give you a breakdown by the numbers. If you need a $1,000 cash advance and your credit card has a 24% APR and a 3% flat fee, this is what it will look like. So $1,000 times 0.24 will equal $240. This is the total amount of interest that you would have to pay if it took you a year to pay it back. So if you were to take $240 divided by 365 days, this will cost you 65 cents a day. This will be the total amount of interest that you will be paying on this cash advance every day that you don't pay back. So if it took you a week to pay back this $1,000 cash advance, it would cost you $4.60 in interest and $30 for a flat fee. So in total, you will be paying $1,034.60 on that $1,000 cash advance. Now let's talk about the drawbacks. The cost of convenience is high with your typical cash advances. The interest rates on many are typically higher than regular credit card purchases. There are usually no grace period, meaning interest accrues from day one. Plus, there are additional fees, either a flat fee or a percentage of the advance amount. This combination can make repayment more challenging, especially for those already in a bad financial position. Now, here's where it really gets dark. The ugly truth about cash advances lie in their potential to create a cycle of debt. Due to their high costs, people sometimes struggle to pay off the advance in full, leading to a cycle where they take out additional advances to cover the first, making their debt even worse. This can lead to a downward spiral of impacting credit scores and financial health. So the reliance on cash advances can signal deeper financial issues, like low emergency savings or poor budgeting and just plain bad spending habits. Understanding the good, bad, and ugly aspects of cash advances give a well-rounded understanding. It's about balancing the immediate need for cash against the potential long-term financial implications. So let's dive a little bit deeper with some insights from my own perspective on cash advances. I've been in the credit industry for a little while now, having a credit agency and now running a DIY credit repair software. I have a deep inside look on credit and debt. Most financial coaches and creators generally caution against using cash advances due to their high costs, and rightfully so, because anything quick or convenient usually comes at a premium. So high interest and fees can add up, which making it a little bit more difficult to pay back that advance in the first place. So if you find yourself in Las Vegas or Atlantic City and you're low on cash and you're thinking about getting a cash advance so you can go all in on black on the roulette table, this is kind of a bad idea. On the other hand, if you have an investment property and you need to pay contractors or vendors to make some repairs but they don't accept credit cards, a cash advance could be worth it, since you can get that money deposited into your bank account and wired to the contractors. Of course, this needs to come with a plan to pay off this money off quickly so you can alleviate some of those fees or interest. So the use for cash advances is not all created equal. There are times where it could make sense, especially when you have a plan to pay it back, or you know that you would be getting paid a week later or in 2 weeks. But if you're just getting cash advances so you can get access to cash, but not really having a plan to pay it back, then this is where you can land yourself into some hot water. So with the use of cash advances, they do impact your credit score since they're using more of your utilization from a specific card. With high utilization compared to your credit limit, this can have negative impacts to your credit score. So cash advances should be used sparingly when you have a full understanding of the cost involved and a plan to pay it back. Knowing the pitfalls of cash advances, it is wise to consider other options that might be a little bit more financially sound. So let's explore some different options and see how to compare. The first one is personal loans. These can be a viable alternative, especially if you got good credit. Personal loans often come with lower interest rates compared to cash advances. They offer structured repayment plans, which can make budgeting a little bit easier to avoid the debt spiral associated with cash advances. But these are not as convenient since you would have to apply to get approved. Next is by borrowing from friends or family. While it can be uncomfortable, borrowing from someone you trust can be a no or low interest option. The key here is a clear communication about repayment terms to avoid any personal conflicts. Third is to think about payment plans. If your cash needs stems from a bill, consider contracting the creditor to negotiate a payment plan. Many service providers like medical facilities offer plans that break up the bill into smaller and more manageable payments. Fourth is to look at cash advance apps. There are plenty of apps out there that do this. So for example, the sponsor of this video, Empower, has a cash advance feature that can be less expensive than credit card advances. Next is to look at credit card processors. If possible, charge the expense to your credit card directly instead of taking a cash advance. There are companies out there that allow the use for credit cards to send checks or wires. These normally avoid the fees with cash advances, but they do have a processing fee, usually up to 3%. Now, each of these options has their own pros and cons, and the right choice depends on your specific financial situation. It's about finding a balance between immediate need and long-term financial health. Here are some of the best practices and tips to minimize digging yourself in a financial hole. First is to plan your repayment. Before taking a cash advance, have a clear repayment plan in place. The quicker that you can repay it, the less interest that you accumulate. Next is to limit the amount. Only borrow what's absolutely needed. Remember, cash advances come with high fees and interest rates, so keeping the amount minimal can reduce the overall cost. Third is to explore lower APR options. Check if any other credit cards offer lower APR for cash advances. Sometimes promotional offers or specific card terms can provide a more affordable option. Fourth is to avoid making it a habit. Relying on cash advances can lead to a cycle of debt. Use them sparingly and only in genuine emergencies. So this may be a sign that you need a better plan for your budget. And fifth, monitor your credit utilization. Remember, high utilization of cash advances can affect your credit score. Aim to keep your overall credit utilization below 30% to maintain a healthy credit profile. Being informed and cautious with cash advances can help you manage them more effectively. Before we close out, I would like to thank Empower for sponsoring this video. If you want to hang out with me some more, check out these videos over here. I'll see you over there.